Yo. Did you guys miss me? It's been a couple weeks. We were out in Puerto Rico, and I got to meet up with the StockTwits team last week at the Hashtag Awards. Shout out to Dr. Stocks. I know he got the W over me. He has some age on me too, so I'll get him next year, right? So, welcome back to another CMT Lunch Hour. I am your host, Larry Thompson, resident CMT. All that stands for is fancy word for someone who likes to look at charts, right? Analyze price data, look at technical analysis from the perspective of breadth, market participants, sentiment, all that good stuff. So, guys, we'll kind of get into it today, right? It's been a great couple of weeks in the markets. We've kind of rebounded off the lows, and let's wonder, right? Was that the low? So let's kind of take a look here, see what we'll be going over today. So first thing we'll be talking about here is the S&P 500, right? Largest and most important index in the world. I don't care what anybody says. I don't care what your grandma says about the Dow Jones Industrial Average. I don't. Right, we'll take a look at the 200-day. I think this is where, right, the CMT curriculum kind of helps you understand the context of the 200-day. It's not just this arbitrary level, right? It's understanding how we're entering it and where we've been before it, right? So we'll take a look at that chart. The next thing we'll take a look at is there's been some breadth thrust, right? So we trust the thrust, but also you got to expect the fact that we're pretty extended, right? So you got to respect the extension. We'll also talk about software eating the world, right? I think that's the next cycle of this AI boom is the software cycle over the semis, right? And so we have some pretty data to break down there. And then lastly, of course, guys, we will get to the chart request. So spam the chat. I already see some people coming in, Trader N, TC straight up. I see Keith in there sharing some requests. So guys, after I get through my little documentation about going through the S&P 500, right, and kind of the thrust, etc., we'll kind of dive into the chart request. Let's get it kicked off, right? So last time I was on was actually near the bottom, right? So this is a chart I shared and just kind of wanted to review it again with you guys because I think it's important to understand and learn from what we've just came from, right? It's easy to want to place trades today, but understanding where was the trade to take, I think is important. So let's take a look here. S&P 500, RSI on the top, and VIX, fear index on the bottom. Guys, we're at a 45 VIX. I talked about it. If we broke below that 40 level, that was a good buy signal, right? We had that capitulation. We had those prior cycle highs to manage risk against. And we had that 480 level that was just critical. And what do you know, guys, right? So we had this cluster of support. We had oversold and we had panic in the market. And, you know, we've rallied 15, 18% off of that 480 level. I nibbled, right? You can check my Twitter feed. You can check my StockTwits feed. I actually wrote on April 9th, right? I was going to hold my nose and swing the bat against that 480 level. Now what, right? Kudos, right? A lot of people did well in that situation. That was a buy the fear situation. Now what? And so that's kind of what we'll dive into right now. Kind of just taking a look at the broader market and just kind of understanding how people are approaching it and understanding why that 200-day is so important for people. So let's just go here over to the S&P 500, right? So taking a look at the S&P 500, this is daily chart, right? So we have RSI in the top panel, which you guys know I like to take a look at. That measures momentum, right? In the middle, we have price, the thing that pays us. And bottom panel here, we have the ADX line. So what ADX does is it measures the true trend of the direction of the market. So the higher the ADX line, the higher the strength of the trend. It's when trend following tends to work. When the market's choppy, right, the ADX line will start to go sideways. It's when trend, right, mean reversion tends to do better. And then when you start to see a slope again, right, you start to see the slope improving. You start to see the trend start to change. So the thing I wanted to highlight here is you'll see this 200-day in gold, right? And you'll see prices below that 200-day sitting around 573. But you'll hear a lot of people talking about people who haven't actually studied technical analysis, which is fine, right? I understand there's people who want to have studied it, but didn't. You'll see people say, oh, well, we failed back in April, so be wary. And sure, that might be the case, right? That statement in and of itself is true. But the thing you got to understand is the context of the market from this April, right? This April, late April failure, right? To the context of the market today, right? So this was a failure. Actually, it was late March, right? We had that failure. What you'll notice here is that we're actually above some key levels that we were below before, right? And you look at RSI, we'll start there. Momentum was below 50, right? Which told you that the bears had control of momentum. And then we had this oversold, right? Then we retested 50 and now we're back above 50. So we've seen this momentum thrust in the market. And now RSI, right, is above 50. It's in this 57 range. The bulls have control of momentum. Then you take a look here at this all-time high AVWAP, which served as resistance, along with the 20-day EMA, which served as resistance. What do we have now? We have price above both of these levels when it comes to price action, and they're sitting around this 550 area. So I think a lot is being made of the 200-day arbitrarily without context of price and risk management levels, which is what matters, right? Predicting the future and how we react to the 200-day doesn't matter. No one has a crystal ball. What matters here is where can I manage risk if I'm wrong or if the 200-day fails again? And the reality is here we have much cleaner levels to manage risk against than we did the prior time. So what does that mean as a trader? That means that we can approach this with less caution. Not that we're just swinging the fences, but we don't have to immediately sell here because we might pull back to these support levels here at this 550 area and then rocket higher. So I would just ignore the arbitrary analysis that's being done around the 200-day and actually provide some context around it, because you can actually see we're building a base here and we're shaping up for that next move higher. Obviously, a basing pattern here would be great. A little bit of consolidation would be great. But I think we're entering this in a much better position than we were entering it in back in late March. Last thing I'll add looking at this chart is in terms of the ADX, you actually have the positive directional above the negative directional. And you can see back here when we tested it, right? Look, the negative directional trend was much higher than the positive, right? The strength of the downtrend was increasing while the strength of the uptrend was decreasing. That's how we got that really quick crash, right? That 10%, right? It was like a 10% in 10 days or something like that, right? And so this is where the context of everything around the market is important, and you can't just arbitrarily look at analysis and just assume that because we're testing the 200-day that we're going to fail, right? You can't be predictive. I think you could be reactive. And I think this 550 level, if we get down to it, that's a buy all day, because I think this is going to work its way out. And if not, okay, you risk a few percent betting to the upside. But yeah, in general, I think that's kind of how I'm seeing this chart overall. I'm seeing that we've made higher lows, right? We're kind of basing here, consolidating at this 560 area. And I think the next leg then is going to be higher in the market. Today we're down a little bit, but that's okay, right? You kind of expect that when we're chopping here at the flat 500-day. But I think this range here, you just got to take a deep breath and not try to be predictive. You just have to react to maybe a consolidation below, or if we do break above, right, continuing to add exposure, because I think this flush out, this capitulatory flush out, which I just showed in those prior charts, I think that's the low. Obviously, if I'm wrong, right? We'll assess day by day. But currently, I think it's safe to say you have really good levels to manage risk against to the upside. So that's what I kind of wanted to highlight here about the 200-day. Another chart I wanted to take a look at real quickly with you guys is, right, why we liked that 480 level so much. And you can see it's because it was these prior cycle highs, right? It was the prior cycle highs and VIX was really accelerated. And you had all this underlying support, right? You had the AVWAP from the bear market low. You had the 200-week simple moving average. You had all that support lining up similar to what we have now, where I didn't know that 480 was going to be the bottom, but I had really well-defined risk to swing the bat and react to it. And it just so happens it worked, right? It's not because I'm a genius. It's because I had clean levels to manage risk against. I also see the chat popping off. Guys, I will get to your chart requests here in a bit. Just kind of trying to go over a couple broader market charts for you guys to try to understand. So that's how I'm kind of looking at the market right now. The next thing I wanted to talk about, continue without saving. The next thing I kind of wanted to talk about is looking at the SPY, right? Another thing I want to do here is I want to take this chart and just show you guys why I think that we might be in this range for a little bit. It might just be a little messy sideways. And one of the reasons is if you look at the distance, right? Distance from a 20-day, I'll put this in the bottom panel here. I want to do this guys live so you guys can kind of see how I do this in charts, right? So you look here, this bottom panel, this is the distance we are from the 20-day moving average. And you can see it got pretty extended here. So we had a strong thrust off the bottom, right? And then now you have to respect the fact that we got a little bit extended. And so I think as this comes down and as we consolidate sideways, this buying opportunity against this 550 level, this is just another confirmation that I think it'll be a good buying level. And then, right, continue to add exposure as we maybe retest and get above this 200-day. That's kind of how I'm looking at that, guys. So next thing I kind of wanted to talk about with the squad was let's take a look. I want to take a look at something interesting that I think no one is talking about, right? So everyone is talking about semiconductors, right? We're all familiar with semiconductors. And I think the story is shifting, right? I think the baton has been passed when it comes to semiconductors, right? Take a look at this chart here, and you can see on this chart that this is right, a 5-6 year downtrend in software versus semiconductors. And I think it's shifting, right? I think software is the name of the game right now. I think we're going from people who build the chips in the AI phase to the application stage of AI. Think about the companies that are doing the best in the market right now. You have ServiceNow, you have Palantir. I would even consider Uber a software company, right? Does Uber own the cars? No, right? Uber is a software company, right? You think about Hood. Hood is a software company, right? It might be in the financial services space, but software is eating the world. And I think as people continue to do analysis around semis, I think they're missing the boat when it comes to software, because software is now actually the largest component sub-industry group of the S&P 500. So it technically matters more than semis. And I think that's what this chart I'm trying to highlight here, right? That's what this chart is highlighting. You can see on the top panel, we have software versus the S&P 500, and then we have semis versus S&P 500. Software has built this large cup and handle pattern, right? And it looks to be breaking out. I think semis probably follow here, but you can see over the past year that there's been rotation. You can see this kind of building pattern here. There's been rotation out of semis in this basing pattern, right? This bottoming pattern and topping pattern, right? You can see the rotation out of those semiconductors and rotation into software names. So if you guys are looking for ideas and looking for leadership, I think you continue to look towards software. Names in it, Microsoft, right? Microsoft is starting to shape up a little bit. Palantir, CrowdStrike, right? Cybersecurity names. Those are the names that I think are going to continue this next leg in this AI boom. I think that's kind of where you want to be overall. So that's what I'm seeing in these charts, guys. What's the chat think? Does chat think software is now more prominent than semis, right? Because I do. I think that's kind of where the baton is being passed. It's being passed from those semiconductor names to those software names. So, all right, chat. Let's why not get into some charts here, huh? Let's get into some charts. So, see some chart requests coming in. Let me pop back over. And let's get into some chart requests. All right. First chart request here is pins from TC straight up. All right. Let's clean this chart up a touch. There we go. 200-day. All right. So let's start with the weekly chart. Taking a look at pins. All right. All right. Taking a look at pins here. Okay. All right. You guys kind of see here, pins been trading sideways, right? Just a sideways kind of chart in general. I think though that you have this area around this actually $29 area, right? This $30 area, where if we can get above it, you might have that scoop and score pattern kind of building in pins. I don't love the look of this chart. I think there's probably better setups out there. I know there's better setups out there in the market, but you have this potential for this double bottoming pattern here, right? I think you have potential for this to be a double bottoming. Let's take a look here. right? You have potential for a double bottom. Right, so that's kind of the level there, is that 23 level. And you've seen a nice thrust off the lows there in a name like that. But I don't know, man. I don't know if you continue to see that upside in a name like this. I think it might have ran its course. But if you want to manage risk, that's kind of where you're managing risk, is you're kind of seeing this breakout against 29. And I think if you're long against 29, that's kind of the level I would be long against. 29's the level on pins for me, right? I think you kind of have some clear levels to manage risk against in pins when it comes to that $29 level. All right, next chart, Rivian. Let's take a look at Rivian. All right, let's zoom out, start with the bigger picture, right? Rivian looks to be building a basing pattern, right? Looks to be trying to build this basing pattern, kind of building, right, one after the another of these bases. I think 15 is probably your level in something like Rivian. If you zoom into that daily chart on Rivian, you can see there's a decent amount of gap ups in a name like Rivian. Don't love it for that regard, right? It's just kind of messy when it comes to something like that. And let's take a look at it with some moving averages. So taking a look here at Rivian, you apply some moving averages, right? This $12 area here, let's do, there we go. All right, looking at Rivian here, it's just messy, right? So it's a pretty messy chart overall, getting back above some key levels in terms of, right, getting back above the 200-day and the 20-day. I think that's key, but you still have a decent amount of overhead supply in a name like this, right? If you take some quick chart analysis, you can kind of see there's overhead supply in an area like this on a name like this. Let's zoom out again, right? You just have so much volume that's traded below this $18, $20 level that I think you might just struggle there. If you're looking like a longer term play, right? This is something that you like from a longer term perspective. I can kind of see, right? I can see we're kind of making higher lows here, right? And then maybe you just apply a longer term moving average over top of something like this because you like it from a longer term perspective, right? Do something simple like a 40 week, which is a 200 day, right? When you're looking on this perspective like that, and you can kind of see we tested it. So I think from that perspective, your floor here is at $12 level in a name like this, right? And then your upside is probably to 20 before you start running into some real trouble. But overall, it's right. It's a pretty messy looking chart. I don't really see a reason to be adding exposure to a name like this at this time. Not something I would be doing. But overall, I think if you're in it, you can stay in it. I think you see RSI kind of improving here, but not something I'm swinging at the moment. All right. Next chart, UNH. Oh, foul. Right? You got to zoom out on something like UNH. You got to look at a monthly chart, right? A long-term uptrend. Something's changed here, guys, right? Something has changed with this company, right? It's down to 40% from its highs, right? You look at that weekly chart, you can really see the damage has been done in a name like this. And we're below this area, this volume area around 500, where you might have found support. And what is this? 3 straight weeks. In 3 weeks, it's down 35, 36%. Yeah, this isn't something I'm touching with, right? I'm not staying anywhere near a name like this, especially in the healthcare space, especially something that you would think would have a defensive nature to it to some degree and would at least see stability overall. But you look at this, let's look at it versus, let's do a quick comparison here. Let's take a look at UNH. Let's take a look at UNH versus XLV. Right. All these prior gains, the blue is UNH, the gold is XLV. All this prior alpha that it generated for healthcare, right? Now you can see over the past 5 years, right? Healthcare is up about 32%, and UNH is up about 34%. So, yeah, that's a rough go for something like UNH. I don't see a trade in it, right? I mean, I don't know what you're going to do here. It's one of the things I'll note on this chart is you'll hear people say how oversold is a good thing, right? You'll see people try to buy oversold, right? You don't want to buy oversold. What you want to buy is you want to buy stuff that gets oversold and then rebounds from oversold. So you can kind of see in this prior instance here, right, around this $35 area, sorry, see this candle here, right? You want to broke below 25, and then once it gets back above 30, that's your signal. If you would have bought there, right, until it got overbought, that would have been a solid trade. So if you want to look for something that's oversold, beaten down, wait for the break below 23 and then wait till it gets back above it, right? Think about it like if it's a fighter and the fighter's a favorite, right? And he gets knocked down off the canvas, right? You don't want to bet that he's going to win the fight and come back until he stands back up, right? Because he might be knocked out. So wait until the stock gets back above 30 and comes back to life over on top of the mat to then place that bet. So in UNH, that's something I would wait for, right? I would wait for it to kind of get back above 30 on RSI level, probably reclaim $400, and then maybe you look for a scalp to the upside. But overall, pretty messy looking chart. Planet Fitness. Dude, good looking chart when you zoom out on Planet Fitness, right? A lot better looking than UNH, United Healthcare. All right, kind of see this level here, right? Candlesticks make it a touch messy. Let's just switch this to a line chart just so you can kind of get just the closing prices, right? So let's remove the 10 week. So, right, you can see it's at a critical level. Right, this 95, 94 area, this is your critical level. And honestly, right, the RSI is telling you the same here. You look at RSI on this chart, right, see how it's just trading between 45 and 55, right? This is just a consolidation. The question is this consolidation going to resolve lower, or is this consolidation going to resolve higher, right, when you're zooming out on this chart? Because I think you want to start at this larger time frame. I would lean towards, right, like it's building a nice base, right? The underlying trend is up. It's above the 40-week moving average. So like I lean towards being bullish on a chart like this, right? That's the way I lean, right? I lean towards being bullish on something like this. The question is, we have to wait for this to resolve to the upside. But we get below 93 here, you could see a short that goes down 9-10% back to this 82 level. So longer time frame, right? Wait for this resolution out of this little base, and let's kind of zoom in and look at the, see, you kind of have that gap up around that $90. So maybe it fills this gap, right? If it breaks down here, you have a gap fill that gets you down 10%. And that's something you could look at. That would be pretty insane to see that gap up get reversed. But that's how I would kind of be looking at it, waiting for probably a break below 92. Then maybe you take it short. But yeah, I would just wait for this mess to kind of resolve, because you see it's been a mess, right, for 125 days. So the question is, why are you looking to get involved in something like this? If it's a longer term time frame, it maybe makes sense. But shorter term, this is just a gap that looks like it might be filled. All right. MGNI. Let's pop on over to MGNI. Magnite. What we doing here? See, guys, like, just what's Magnite do? It looks pretty messy, right? Looks like it's building a base, trying to do something, but right, 21, it kind of peaked. Is this something related to COVID? Did it have some, is this like a Zoom? I'm not sure exactly what this is, but right, great week this week. If you're a shorter term trader, that's probably why you're looking at this, right? You saw a big gap up this week. Let's take a look here. Right, saw a big gap up, back above the 200-day here. Let's do some legends. Let's put some legends on this. All right, so the gap up, back above the 200-day around 14 bucks. And these were the trades that were working, right? It was these breakdowns and then rebounds. Now the rubber meets the road here is this overhead supply at, right? It's kind of where you're seeing it. It's kind of in this area, right? Was support, right? Kind of cracked through it. And then now we're wondering, is this going to hold? Right, that's my question right now. All right, is this level going to hold? That's what I'm curious about. So, I could see it either way, right? I think if you're above 15, you stay long, but you get below 15, right? You're overbought here on the daily, right? Wait for this RSI. Like I kind of said here, wait until RSI comes out of the oversold. Wait till it becomes out of the overbought, and then maybe you get shorted, right? Maybe you get short against this $15 level. But, right, if it kind of bases out, this $14 level serves as support. I think you got to stay long. I would have a bias to be long here, but I think the easy money's been made. But I think that 15 or 14.50 is kind of that level that can serve as your floor here in a name like this. But good move this week. Not exactly sure what they do. Let me take a look real quick. Let me see what MGNI does. Let's take a quick peek. Technology. Okay. So it's a $2 billion, so it's a small cap technology company trading at a crazy PE, but that's okay. I think the easy money's probably been made in this name, but right, I like where the head's at. I like trying to take big swings. Meta, what level CMT? I'm taking level 1 next month. Beat the sheep. Shout out. Shout out to Beat the Sheep. I finished my exams, so passed all 3 levels. So I'm actually just a CMT. But good luck on that exam. Reach out to me if you have any questions. TKO just reported earnings and is down. I actually really like that name overall. TKO, for those of you who are not familiar, TKO is the parent company for the WWE and UFC. And so it's about a $13 billion company, right? And what I like about this name is, right, the relative strength. This looks like Palantir, right? This is the WWE and UFC, and it looks like Palantir, right? So there's something to that business model. When you kind of zoom out on the chart, you can see it's down this week. It looks like earnings were reported, as mentioned. But when you zoom in, man, I got to say, this 155 level, right in here, right? Maybe we serve as support here, and we continue to get going because it's above all those key major averages, right? It's in a strong uptrend. This might be a buy the dip situation, right? We get below 150. I think you maybe cut your losses, but this is looking like a buy the dip situation to me. I'm pretty sure Palantir did something similar to this, right? Yeah, right? Pretty similar chart. Palantir. Right, that Palantir chart. Let's remove some of this junk. I like TKO. I think that Palantir chart looks similar as a whole, right? Look at this TKO chart again, right? Similar, kind of a strong reaction to this earnings, but I think above 150, I like a name like this. And even when you zoom out, right, you zoom out on something like this, just a strong uptrend, and you have some earnings related news, right? On the weekly chart, you can kind of see that momentum is waning, right? That's a momentum divergence. But I still think when you look at that, daily above 150, you got to stay long a name like this. You guys watch WWE? I'm actually a fan. Grew up watching WWE. Big Brock Lesnar was my guy. Brock Lesnar and Paul Heyman. That was a squad. Now it's Seth freaking Rollins. But yeah, I don't hate this chart. I actually really like it. I I think if we stay above, look, it's already kind of reacting. I think, yeah, I think against this 155, 150 area, yeah, I think you could stay long TKO. Let's save this chart style. Let's update volatility. Great. So yeah, good name there by Crowd Warrior. Someone said Crowd. I assume they're talking about CrowdStrike. CRWD. Right. This is a space, right, in general that's looked really good. Ooh, kind of getting hit today. Right. But in general, I mean, it's been a buy the dip in Crowd, right? It had this huge, this was back, this is how you know something is strong, right? Back in August, this is when Delta, basically CrowdStrike had that bug in their software, and there's no alternative, right? And that rebound went to new all-time highs a couple months later. So I think a name like Crowd, you just have to stay in it. It's a winner long-term. I think it's a best of breed. It's a company we're going to look back and wish we owned more of. That's how I feel about it. So this is kind of the pattern here, right? You had the base breakout, you had the fake out, and then you probably have this other one. I think against that 400 level, CrowdStrike is just something you got to be in. Take a look. Let's zoom out and look at the weekly, right? Like we kind of talked about, you had that failed. You had this back in August. You had that crazy disruption when they had that glitch in the software, and now we rebounded from 300. I think against 400, you got to be long. Got to be long CrowdStrike. And if we break 400, you're risking $8. But that's kind of the levels when you zoom out on something like that. Good call out by Joseph there. I think CrowdStrike is in that IGV space, right? It's in that software space I've been talking about, right? Look at IGV, something similar, right? You had this huge base, right? You had this fake out, shakeout, which hurts, right? Like you should have gotten out and managed risk. I'm not going to act like I didn't get out and manage risk. But now you've kind of recovered and you're looking for those next steps higher here. And we're above all these key moving averages. So wait for a pullback, right? There's a chance, right? We start to form, right? We start to make lower highs. But I think you're good in a name like, I think you're good in the software space. Today, we're seeing a pullback, right? We've had a strong couple of weeks, right? But I'm going to be a buyer into these dips. Be a buyer into these names like this. Be a buyer into these stocks that are going to pull back to these moving averages that have held up strong and had these strong rallies. I think that's kind of the play in something like this. So, all right. Let's take a look. I know people like to take a look at the Mag 7, so let's do a quick run through of the Mag 7, and I'll get you guys out of here. Starting with Apple, right? I don't think the Mags, let's actually start with the Mags overall. Let's do that. Let's actually just go straight to Mags, right? So, right, this is a chart. Actually, yeah, let's take a look at this chart. Right. So I haven't made updates on this one particularly in a while, but I think it highlights kind of the trend change in the stock, right? And kind of where we would see that next resistance level and then where potential support could be. Because this is what a lot of charts look like right now, guys, right? We've had the strong rebound. We've had the strong rally, right? We were in this bear mode, right? We were in this bearish regime. And then RSI starts getting back out of that, right? Starts getting in the green area here. Right? RSI is working its way out. And we might do a little consolidation here before the next leg higher. Right? So look at something like Mags, right? And you can see here that, right, this represents the top 7 names, right? And what we like to see is the fact that we've recovered a lot of this, but we're still below this key level here. We're still below that 50, that round dollar level in something as broad as the market. Someone asked, great question in the chat by Trader N. Can you explain what overhead supply means? Great question. So overhead supply simply means that there is, right, sellers that exist at those higher levels, right? So another word for overhead supply is resistance, right? Or potential resistance. And the reason I call it overhead supply is because there's sellers that are probably waiting to get out around the $50 area, around the 200-day area. So to some degree, overhead supply is a fancy word for resistance or potential resistance. But in general, the supply means supply of sellers, supply of people willing to get into the markets to sell the stock. So that's what I mean by overhead supply. So great question in the chat, and keep questions coming, right, guys? That's what this is about, this lunch hour. I'm always willing to kind of help people kind of learn some of this stuff. It took me a while to do it and always want to help out. So yeah, so overhead supply meaning, right, there's a place where sellers have showed up in the past. So there's a chance here the market could, their sellers could supply the market with stocks, AKA there's an abundance of supply and not a lot of demand, AKA price corrects. So that's how kind of I think about overhead supply. And that's what we see. This $50 level is key in the mags. So let's look at the individual names, right? So starting with Apple, right? Apple is below this 210 area, right? We had a strong rebound, great. But now Apple doesn't look great overall, right? Kind of involved in the hardware space. It does have good software sales. But if Apple isn't selling iPhones as much as they used to, and the cost of doing that business gets more expensive, right? You can't upgrade the phone, probably not going to be able to continue to up other costs too, because people justify, oh, now I'm paying $12 for this software that's on it because it's a newer phone. And so I think Apple is just something you don't want to own below 200 bucks. Hopefully it makes a higher low here, right? I think that's something we could see. Right, this is wishful thinking here, guys. But right, maybe we do something like this, but I would wait to get back in this name. I don't see a great setup on the shorter term chart. I'm sure the weekly chart looks a little bit better. Right, weekly chart looks a little bit better. Right, against that level there. That's kind of your level. That 190 level is your level when you zoom out on Apple. That's where you kind of want to manage risk against. Meta. I like the looks of Meta. Meta is actually one of the stronger names for sure. So Meta to me is a own it against $600, right? Getting back above the 200-day, right? It's one of the few Mag 7 that are back above the 200-day. And, right, it just makes sense, right? What's the tariff worry with Meta? There's probably some, right? There's probably some, but people are still going to use Facebook. I think ads are still going to be driven there. I think the ad business in that area is much stronger when it comes to something like Meta. Think about that, right? Like we all work for companies and we know that Facebook generation and leads tend to be a lot better than magazines and billboards and things like that. So if companies are cutting their budgeting costs for marketing, et cetera, they're probably not going to cut their meta budget because that's actually where it's doing well. They're probably going to cut their budget relating to something else like local flyers or local publications. But I think Meta's advertising business is still a strong spot for a lot of those companies, especially Instagram, right? Apple we talked about. I'll give you guys another view of Apple here, right? Why not? Got a couple minutes. All right, kind of a little downtrend here. Right. So that's kind of what we want to see. We want to see this downtrend break. See this downtrend break. Oh. Right, and get back above that 210 area in Apple. But overall, it's a struggle bus. Amazon, right? Amazon, key level in Amazon from that shorter term time frame, right? You can see it's approaching this flat 200-day moving average. It's really building this base against it, right? We get above 200, you got to own it, right? So this is kind of how I'm seeing it here. Let's get above this 200-day. Let's get above 200 bucks, right? The daily double, 200-day and 200 bucks. That's the levels on Amazon, right? 200-day, 200 bucks, Amazon. Broadcom, one of the stronger names in this space, right? Kind of, we want to see, this is what we want to see these other names do, right? Look, similar pattern. Get above that 200-day and then follow through. That's what we want to see these other areas do. Broadcom. Berkshire, kind of a little bit of a mess here. No real thoughts. Google, struggle busing, right? And that's gonna be an issue for the broader indexes. Don't really see a reason to be trading this name at the moment, right? It made a lower low, and it's kind of in a downtrend at the moment. And then Microsoft, right? Microsoft is that zoom out, and it had that big up week the past couple weeks, and it's starting to reemerge as a leader in the Mag 7 space. And so I think Microsoft is a name you could be in overall, right? Especially against this 420 level. It's still messy, right? That's why overall the Mag 7 look messy, because they're messy. And we need them for the market to continue upwards. NVIDIA, right, kind of trading below its 200-day, kind of building a base here, right? I think the easy money's been made in the mags. I think it's honestly some time to look elsewhere. A name that does look great, right? Probably the best looking chart in this space is Tesla, right? Tesla against this 280 level, it's doing that scoop and score pattern that we were talking about for those other charts, right? So Tesla is doing what we want these other charts to do. Let's update it. Let's get that 200-day on here. Not because 200 days is anything special, as I talked about at the beginning of the show, but just to show what we want to see these other stocks do, right? So trying to get above that 200-day and then rock it through. Another thing I like about this Tesla chart here is you see this RSI. RSI was below 50, and it was serving as resistance, and then it got above it, and it turned into support. So I really do like Tesla against that 280 level. I think this thing can continue to go. Don't know why, but I think this could have that scoop and score pattern. So I think this is the best looking of the mags names. This and Meta, right? And then Amazon above that $200 level is kind of what I'm looking at. Apple, you can leave it alone. And overall, I think as a whole mags, you could just leave the whole trying to get in this, wait till we get back above that $50 level, and that's kind of where I would like to be long. Right, we have another chart in the chat. Boeing have been buying on dips as the news was terrible, pointing out possible double bottom, and the USA would never let it fail. Okay, let's take a look. Wow, right? Like great trade, right? You probably got in down here, but you can see overall there's not, over the long term, not really money to be made in something like Boeing, right? I think the airline space in general is a hard place to make money, but if you've been trading it, right, I think against this 190 level, that's kind of the trade level here, right? There's your breakout. All right, there's your breakout. There's your breakout. 190 is your level there. CDN Road Warriors. CDN Road Warrior. So, yeah, that's kind of what I'm looking at, guys. I like the looks of Meta and Amazon over 200 and Tesla over that 280 level when it comes to kind of that market. And then last thing I'll leave you guys with is I'll just go back to the SPY chart here. Someone asked about Palantir. Let me hit Palantir real quick. And then I'll go back to the SPY chart. And I'll end with the SPY chart. Palantir, right? It's hard not to own it against this $100 level. That's where I like it. Such a strong chart. But $100 is your level to manage risk against, right? I think you can stay long Palantir. It might correct. You can also, right, if we get down to the $66 level, I think you buy it all day. You haven't seen that type of, every time we kind of get down into this area, that's the next area of support here. So in between here, it might be a little messy, but if you have a long-term thesis, I do like it against 110, but it might come back down here and chop sideways for a little bit, which wouldn't be a bad thing because look at what this name's done, right? It's crushed the market. You are starting to see on some of these weekly charts, right, this RSI failure, right? Failure to break out on an RSI basis. Yeah, it's just hard as a trend follower to bet against this name just yet, right? Just hard to bet against it. But if you do, shoot. You want to be a short? You want to be Mr. Short King? Shout out to the Short Kings in the chat. Why not? Why not let it rip? Trade of the day. Palantir short against 125. Do it. Do it. Palantir short against 125. There you go. Option artist, take it short. But that's it, guys. That's the last chart I want to look at. I will take you back to give you guys more context here. Last chart I want to just reiterate for the squad is S&P 500, baby. Whoa. Right? Everyone's talking about this 200-day, but we're back above this 20-day EMA, and we're back above that all-time high AVWAP. I think if we pull back to 550, you got to buy it, right? We break below 550, that's where your risk management level is. But I think above 550, it's buy the dip market. I think we're back into buy the dip market, guys. I'd love to say that, love to see it. And so, yeah, I'll be buying against that 550 level if we get back down there. But in general, also like software names, kind of keep an eye out for those. Just continue to manage risks. Continue to take a look at the charts this weekend. Take a look at those weeklies. I actually kind of like that Palantir short to manage risk. I kind of like that Palantir short. That might be my trade of the day, is that take Palantir short against 125, against all-time highs, right? But also buy dips and SPY to kind of offset it. And actually, guys, I'll give you a bonus chart. Let's talk about some bonus charts here. Why not? Got a couple more minutes. Man of the people. Man of the people. If I can find it, right? LOL. Here it is. This chart. Right? This is S&P 500 equal weight. And what you can see here is this not a top pattern, right? And we're getting above that 170 level. So as long as RSP is above 170, I don't think you should be out of the market, right? We might course correct a little bit here, but I think that 170 level, you got to be opportunistic in the market. There's going to be a pullback that occurs, right? It's just where do we find support after that pullback? Because the market's a little bit extended short term, but that happens. Let's take a look real quick at Bitcoin, right? Bitcoin was in this torture chamber and broke out. Now it's at this 102K level. Right? I don't think that happens if we're about to correct another leg lower. I don't think this is a fake out in Bitcoin. I don't think a lot of these stocks are holding these levels because of that. But that's what I got for you guys. I hope you guys have a great weekend. Keep an eye out for that 200-day. Manage risk against it. I think 550 is your level. So cheers. Have a great weekend. Peace.